Welcome back for my final daily report market analysis video with me, Richard Perry, market analyst at Hantec on Monday the 14th of September. Looking at this gold chart where the sort of market is still essentially trading sideways, what we saw was gold breaking this uptrend, this 4-month uptrend that we'd seen in place since early June. Broke that recently, last week actually, and basically since then has been sort of consolidating effectively underneath that old uptrend, which essentially neutralises the outlook, doesn't it? And I've drawn in here the floor of recent weeks, which is 1902, and essentially the resistance of recent weeks, which is 2015. And within that, you're fairly much neutral. You've got momentum indicators, which are a shade of positive bias, but not by any means something that you'd be sort of going all out on. Sort of stochastics just rolling over a touch around neutral, MACD lines flattening off at just a shade above neutral. So very, very neutrally configured momentum now developing, and this range of the past 5 weeks is sort of neutralised that outlook. Within that, you've just sort of picked up back above the 1940 level. I sort of drew that in last week as a bit of a near-term breakout resistance, holding the breakout interestingly since then as well, 1937 to 1940 if you're going to sort of do an area of support. And again today it's come back towards that and bounced a little bit. But I spoke also about previously the resistance at 1955, and that sort of dates back to mid-late August, where 1955 was a basis of resistance. It became a pivot line on a breakout above there, supportive, and then break down. So it seems to again be becoming a basis of resistance. So it's pretty much neutral, and underneath 1955 and staying under there, it remains neutral, the outlook on gold. But you'd need to see a decisive move back above 55 and then essentially above 1966, which was Thursday's spike high in the wake of the ECB meeting, and that was rejected ultimately, and then markets sort of consolidated since. So we're just sort of biding time, I think, on gold at the moment. I'm still a buyer into weakness, not as high conviction as I was. But still a buyer into weakness. You've got the Fed meeting on Wednesday, which is likely to drive yields and the dollar, and subsequently by association gold. But yeah, it'll be interesting to see how gold sort of comes out of that Fed meeting. But for now, neutrally configured on gold. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website, sign up for our webinars, and click to watch Trader Talks, our videos that give you top trading ideas.